Colleagues, welcome to this Institute of Commonwealth Studies online discussion, Challenges to Commonwealth Green Transitions, the case of Guyana and Trinidad and Tobago. I'm Dr. Sue Onslow, the Director of the Institute of Commonwealth Studies, and it gives me great pleasure to chair this discussion. This is being run as a webinar, so we are encouraging people to put their questions in the Q&A function, which I will make immediately open, so colleagues who have registered will be able to see the flow of questions in the online, essentially chat function. I'm delighted to welcome as the panelists for this evening's discussion, Mr. Arthur Deacon, who will be speaking first. Mr. Deacon co-leads America's market intelligence energy practice, where he oversees multiple studies in the sector, focusing on market feasibility, ESG due diligence, market entry, opportunity benchmarking, partnering strategies, and other strategic areas for energy companies. So we have an expert giving the international business perspective, which is superb. Then the speaker will be Dr. Roger Hussein, whom I'm delighted to say has just been promoted, he has said, who works, of course, at the University of the West Indies, St. Augustine campus. And so I presume that you are now Professor, Roger. So this is excellent, congratulations. Roger's research interests focus on international trade with emphasis on the Dutch disease, of course, the resource curse, Rybczynski and reverse Rybczynski theory. He's done work on intra-industry trade, the natural trading partner hypothesis, and economic integration. Speaking third will be Dr. Thomas Singh, who is senior lecturer at the Department of Economics at the University of Guyana. Prior to this position, Dr. Singh was coordinator at the Institute of Development Studies at the University of Guyana. He was also a visiting Commonwealth academic fellow at the School of Economics at the University of Kent, Canterbury, working with Dr. Edward Cartwright on cultures, institutions, and economic behavior. Fourthly, I'm delighted to welcome Dr. Janet Balkan from the Faculty of Forestry at the University of Columbia. Dr. Balkan is Associate Professor in the Department of Forestry Resource Management in the Faculty of Forestry. She's interested in new forms of enclosure, both de jure and de facto, often mediated by the power of the state and its allies. So we're very much looking forward to Janet's perception and analysis of issues of governance and how they impact upon marginalized communities as connected to timber, minerals, hydrocarbons, and associated intangible products and services. So I'm particularly pleased to be chairing this discussion because it follows a very energetic online discussion chaired by the Commonwealth Foundation yesterday on just transitions. As was pointed out by the international panel, fossil fuel energy systems are deeply woven through the fabric of economies, labor markets, and individual lives. Certainly globally, there's been massive investment in renewables, but we very much look forward to the discussion about the extent to which this has percolated through the Caribbean region, specifically Trinidad and Tobago and Guyana, and what is then the approach of the private sector, international energy markets. Arthur, if I can invite you to begin, please.
Absolutely. Thank you very much, Sue, for having me. It's a pleasure to be here. So with a focus on the international perspective on Guyana and Trinidad and the Caribbean in general, I think it really depends on the type of company that we're speaking to, right? International oil companies are, of course, very interested in Guyana and Suriname to a lesser extent, while Trinidad and Tobago is losing a lot of that popularity that it's seen in the past 10 or so years. Trinidad and Tobago, I think the biggest question that these companies have prior to going into the country is whether or not the decline in its oil and gas sector is going to be something that is inevitable, in the sense, will there be gas reserves to replace the declining output in its petrochemical sector, in its manufacturing sector? All signs indicate that this decline is going to continue. The new exploration is focused on smaller pools of gas using existing infrastructure that's already developed offshore Trinidad. The fields are quite mature. So it doesn't look like there's going to be any major findings in the near future. A lot of Trinidad's expectations depend on the Calypso field, which is being explored by, I believe, Woodside, formerly was BHP, and also depends greatly on the US lifting subsidies on Venezuela, which doesn't seem like it's going to happen. There's been more talks recently of the Biden administration lifting those sanctions in exchange for free and fair elections in Venezuela in 2024. But we've seen this play before. The Venezuelan dictatorship, makes it seem like they're going to start talking and start moving towards a free and fair election. But the closer it comes to the actual election, the lesser concessions they offer. So it's going to be this back and forth. Venezuela is going to be able to still continue to sell crude to European companies in exchange for the pay down of debt. We already seen that with some Italian companies. But we at AMI don't see a full lifting of sanctions anytime soon. So the gas reserves in Trinidad and Tobago are going to remain declining in the next decade or so. And with the major findings in Guyana and Suriname, of course, that is attracting attention away from Trinidad and towards Guyana and Suriname. So in terms of renewable energy in Trinidad, the problem is that the gas prices are so subsidized by the government that renewable energy is not competitive on a price basis with gas. So that forces companies that are looking to develop solar projects in Trinidad, it makes them not economically feasible to do so. We already see this with Lightsource, which is a BP solar company. They're trying to develop 100 or so megawatt solar plant in Trinidad, but they can't come to an agreement over the price because the price that off-takers are willing to pay is just not feasible. And the reason is because they can get gas at a much cheaper price. So until those subsidies are removed, which it looks like they might be in the near future, renewable energy deployment in Trinidad and Tobago is going to be quite limited. The thing that might change that is international corporations putting pressure on the government. So a lot of these international companies have targets, right, to decarbonize by 2050 and whatnot. If they need to buy clean energy, if they need to power their operations with solar or wind or whatever it may be, they will be willing to pay a premium if necessary to achieve those targets. And that's when these developments are going to be encouraged by the demand side of these companies, right? It's going to be quite different. Usually the supply comes and then the companies buy. But because of these decarbonization targets, they're forced to buy clean energy, even if it's at a premium. We're already seeing this a lot in Mexico, for example, where utility scale solar is being delayed because of AMLO's policies. So companies are moving towards developing their own distributed generation facilities to power their operations. They're much smaller. They don't need generation permits. It's much simpler, and they're able to account for up to 50% of their energy consumption. So it's a solution that might start gaining popularity also in some of these Caribbean countries like Trinidad and Tobago. When we're looking at the international perspective focused on Guyana, it's been quite astonishing. I think everyone here in the call probably agrees with this, that the spotlight has been shining very bright, especially in the last year or year and a half or so since oil started coming out of the ground. What's been challenging, I think, for a lot of the international companies coming in is navigating the politics of Guyana. Guyana, it's a very polarized country. It's a small country. And companies have a very tough time being able to get contracts, be able to win business there. They're not sure who to deal with, who's trustworthy. And that's something that without a local partner or someone that understands the country is very difficult to navigate. So if you're not EXxon...
Arthur, I'm sorry, your volume has just dropped off.
Sorry. So if you're not EXxon or one of the partners in the consortium, then it's very difficult to win new business and get new contracts in Guyana. And there's also local content regulation that has been quite strict. The thresholds are very high, I would say, for the first year. They've only released the thresholds that companies have to meet for the first year by the end of 2022. And they're quite high, for some fairly technical jobs. And Guyana still doesn't have the local capacity to fulfill those local content requirements. So that can lead to delay in development of the oil and gas sector. We've seen some companies, have their license revoked. And that's also an issue because there's only one secretariat in charge of the whole local content approval process, and he's been appointed by the executive. So that can also be politicized. I think that's one of the major issues that I see in Guyana is the lack of separation between the government and all the structures in place to take care of the money, to take care of the local content, to take care of whatever it may be. So that's something that really needs some reviewing. I can't say that it has all been bad. There's definitely been some good things that this administration has put forth in terms of leading to fast development, leading to unprecedented basically growth in terms of wealth. Of course, the resources are helping in that manner, but they've also been able to put in places some structures to incentivize that, lower taxation rates, favorable production sharing agreements, etc. That has attracted investment. So I guess I'll just wrap up focusing on Suriname. Suriname is, it's probably 5 or so years behind Guyana and probably 1/3 of the scale, if that. Basically, the biggest concern for international investors looking to Suriname is the fact that the final investment decision on Block 58, the most advanced block, keeps getting postponed year after year. First, the decision was going to come out in 2021, then it got postponed to 2022, and now it's being postponed to 2023. And Total, who's the leading operator of Block 58, claims that essentially they're waiting for more data. They're doing more seismic surveying to see what's actually in those blocks. But we've heard from sources on the ground that Total is still not entirely sure how Suriname and the oil and gas play fits within their whole energy transition strategy. So that's something that is definitely very concerning, because without this FID, all the other investments are going to be affected and delayed. So I guess that's just a brief overview of how international companies are looking at those 3 countries.
Thank you very much indeed, Arthur. Roger, in responding to Arthur's initial remarks, how much do you see the Trinidad and Tobago having a clear long-term sustainable energy policy? Arthur has pointed to regulatory impediments and also to problematic structures, certainly around gas subsidization, which act as a disincentive then for investing in renewables and encouraging that transition. Sorry, Roger, I'm sorry, your microphone is off.
So let me start off by saying, well, it's afternoon here. Good afternoon, everyone. Thank you for the invitation, and it's an opportunity to speak here. I listened to Arthur carefully, and yes, the gas subsidy is an issue, because as we speak, we have Trinidad and Tobago we have the 2nd lowest electricity rate in the Caribbean. I suspect Guyana would probably want to go lower than all of us soon, but we would have to see. Now, the challenge we have in this region, linked to this gas subsidy, linked to making any progress, and I see aspects of it in Trinidad and Tobago. I see more and more, I look at the Guyanese economy often, and I see steps, small actions being taken that raise red flags in my mind, and certainly in Suriname, is the whole resource curse challenge. What we would call the resource curse, and in particular a subset of it called the Dutch disease. Mm-hmm. What we have is the low electricity cost in Trinidad and Tobago in particular, compromising. It makes it's easy to use electricity. The cost is cheap, and therefore the drive and the incentive to go into renewable energy, although there are many announcements effects, it's not there in the aggressive way we would want to create transformative change. And with this war, for example, with Ukraine and Russia, or more correctly, with the invasion of Ukraine by Russia, what we have is a rapid increase in energy revenues. And whenever energy revenues increase, it slows transformative intervention in Trinidad and Tobago. So that you already have comments being made, well, to the extent that the economy is improving, revenues are improving, and things of that nature. And once those type of comments start to circulate, it reduces the drive of the policymakers to make deep-rooted changes. And our economy in reality has been doing terrible. We were ranked as the 9th worst performing economy in the world in the time period 2016 to 2021. In the time period 2009 to 2021, the statistics are similar. We are one of the top 15 worst performing economies in the world. And in the time period 2025, 2026 and 27, using IMF forecasted data, we remain in that category. But so on the one hand, you have this poor economic growth performance, but on the other hand, once you have elevated price of oil and gas, it means although ATA was clear in the decline in production trends, and they are declining, I mean, our production is significantly down, the elevated price leads to elevated revenues and, in my opinion, a reduction in the drive for transformative change. Now, I have been talking to Thomas a lot about what I am about to say. I think that's why it's critical we take a deep dive look at Guyana, Suriname, and Trinidad and Tobago and understand the various dimensional effects of this oil boom, energy boom, because one aspect of it would be the slow pace of transformation into non-energy production, because you are getting all this energy at fairly low prices in terms of local consumption. There is no great incentive. I mean, at the price of oil, sometimes going over $100, $115, $120, the price of gas going at sometimes $6 per MMBTU, $6 per MMBTU, $7 per MMBTU. No government is under, none of these governments that I speak about here, Guyana, Suriname, and Trinidad and Tobago, would be under any tremendous pressure to create urgent change. And so, although we have been making steps in Trinidad and Tobago, we have been raising fuel prices at the pump, which I think was a good move by the government. There is not that parallel, or there is not a strong enough parallel movement towards getting renewable energy going. There are a lot of conversations. BP and another group, they are trying to get a solar plant on stream. There are a lot of conversations, but the actualization has not happened. And I don't see it improving in the current favorable environment that the energy sector finds itself in. BP might as well pull more oil and gas out of the ground and generate money there until it's not profitable enough. The international pressure, though, will go a long way. The more international pressure that is applied to move away from the consumption of fossil fuels and whatnot will ensure that there is a shorter shelf life for fossil fuel-based energy. But the world is in such turmoil now, and the ripple effects from it is such that I don't see the type of urgency I would like to see in terms of our drive towards renewable energy. The same I can say for Suriname in a large measure, and even in Guyana, which has vast capacity for renewable energy. I think when I look at some of the interventions that have been made, I think there is a type of lull. That doesn't mean there's not good intentions, but there is a type of lull, and certainly more could be done. And it's always the case that more could be done, but that's what I observe when I look at these economies.
Roger, thank you very much indeed. So your biggest red flag is the issue of, as you say, the oil bonanza generating wealth that in Trinidad and Tobago's case is offsetting that decade of stagnant growth. And now there is a return to growth on the back of oil generated and gas generated revenues. So there's Energy sector growth, yep.
Yes, but the non-energy sector is not doing as well as I would like to see. And the numbers are terrible. I mean, I call it as I see it, the numbers are not what we would like to see. And I am going using IMF data here, published online available IMF data. And we have a lot of work to do and slip it into the cushions of the Dutch disease and the resource curse and announcing that all is well will not make all well. What we need to do is to go deep in the trenches and change the ratio of production of non-energy tradables to non-energy non-tradables and trigger change. And as relates to renewable energy production, we need to push the ball. We need to set targets and we need to stick to these targets. And that's where I have my greatest concern, because sometimes I feel from looking at the numbers and looking at the dates that the targets move.
Roger, thank you very much indeed. Thomas, what do you feel? Obviously, as Roger has said, you've been discussing these red flags at length. Your perspective from the case of Guyana, which is obviously moving, is a late mover into this, into the energy sector and generation and income generation. Do you see these red flags, in fact, emerging in Guyana?
Thank you, Sue. I hope you could hear me.
Yes, I can.
Very well. Good afternoon. Thank you very much for having me. And it's good to actually follow Arthur and Roger, because I wanted to talk a little bit about incentives, the incentives that we in Guyana have for overcoming what seem to be the obvious fault lines, if you will. But I will start with something that's more in the nature of an anecdotal encounter. Last Sunday, and it is getting to incentives, last Sunday, I was on an island called Leguan, which happens to be the very island the president is from or grew up on. I grew up there. He had arrived with 3 Coast Guard vehicles, an aggregate of 7 massive engines, a retinue of vehicles, at least 15 crewmen and several Coast Guard officers. I'm just saying this to say the cost of his trip was very, very high. And from his seat in Leguan, this little island at a masjid, which is a Muslim place of worship, he made an announcement that the government is going to establish a catering consortium that would bid to supply food to oil and gas vessels offshore. That was on Sunday. In today's newspapers, there was a photograph with an accompanying headline of none other than the Minister of Natural Resources and a high-level team of officials meeting with operators in the food sector to further this announcement that there will be this catering consortium. There will, of course, be advantages to this consortium, not only because the president has sanctioned it and the Minister of Natural Resources is triggering the action, but also because of provisions in the local content legislation. I say all this to say that as we think of incentives, we need to note that in Guyana, an economy that has been dominated by rents for quite a while, and that has had a government that's been dominant over an executive, dominant over the other branches of the government, we see the government's dominance morphing into something like the Internet of Things, that level of pervasiveness occurring. And the fantastic rate at which an utterance by the president can be translated into action is significant, because that action there is creating an influence on market outcomes. Now, that might seem to be a small story, but this matter of the decisions of the government, even in the form of an announcement, having effects on market outcomes, determining resource allocation, these and ultimately affecting commercial decisions. These are things that are not to be taken lightly in any way, especially because oil tends to have effects that we know now fairly well, to do with things like the Dutch disease that Roger was talking about. So I'm very concerned about the dominance, the sheer the dominance of the executive, even in the way we think. There's this latter issue of our thinking is something I'm going to refer to in a minute. But I'd like to say that in addition to all of this, is this concern about increasing uncertainty driven by policy decisions. Never something that is comfortable for investors on the whole. And what usually happens is that these investors seek means and ways to underwrite that those risks, very often turning to influencing the policy process itself. And I fear that that is exactly what's been happening. Now listen to this one here. Very recently, the government has issued a call for a proposal for a 100% private sector owned and financed oil refinery in Guyana. But in doing that, it also indicated that it's providing 30 acres of land, very generous fiscal incentives, including a 10-year tax holiday, that the food feedstock for the refinery would be available from the government's profit share, and that there will be access to the domestic market for whatever is produced in that refinery. All well and good, but here again we have the state influencing market outcomes in a manner that commits Guyana to increased dependence on fossil fuels on both the demand and the supply sides. It's exercising this influence, the government is, by a mere announcement of a proposal that contains generous incentives, instead of allowing other processes, and Arthur referred to these, such as holding an investment forum and just sharing information, that would allow the commercial decisions to happen without influence, if you will. Many people, many investors now encounter, when they attempt to get financing for their projects, that they've got to show that they'll be meeting net zero targets. The cost of financing has gone up for many projects precisely because of those concerns. But on the other hand, we have state intervention, state announcements that give guarantees in the opposite direction. These investors will not have to think about concerns such as net zero and their own pathways, because the government of Guyana is, in a sense, undertaking to do this on their behalf. Now, what's remarkable about this? There are two things that are remarkable about this refinery, apart from the ones I just mentioned. A few months ago, the government issued a request for proposals for an ethanol plant to be built on one of the really struggling sugar estates. The government did make a concession that the proposal can include advanced biofuel technology to produce second-generation ethanol from sugarcane cellulose. So that would have been definitely going the route of renewable energy. But what I should point out here is that a request for proposals coming out from the sugar industry, it was actually a request for a proposal for a feasibility study, as against this one for the refinery, which is not for a feasibility study, but is for proposals to build this refinery. So there again, we've got the state taking action that does not foster this concern that we have about developing a renewable energy portfolio, probably because Guyana has an oil bonanza. The other disturbing thing about this refinery is that just 2 weeks ago, Ricardo Hausman, in a lecture that was organized by the Green Institute, of which I'm director, in collaboration with the UN, in that lecture, he explicitly, specifically urged Guyana to avoid going down the pathway of building an oil refinery and the petrochemical industry. He was quite categorical about this, arguing that if Guyana wants to achieve economic diversification, it will have to focus on economic activities that offer more opportunities for knowledge, capability, and learning spillovers that allow for the production and export of new products, more complex products that would allow this kind of learning. But he pointed out that petroleum occupies that part of the forest space, the product space rather, that does not lend itself to these opportunities. So the question we ask ourselves at this stage is whether the state, which really is the important actor, is providing the sort of incentives that Guyana needs for it to think about a future beyond oil. And I think that for me is the big issue. If Guyana's future is 30 years from today, which is what Exxon's future is, and the oil companies is, then we might as well think that our sustainability is really for a time horizon of 30 years. I share with Roger this concern that we are not addressing the standard Dutch disease avoiding kinds of things. And that we are allowing, just because indeed we see the need to monetize the petroleum assets, we're allowing the oil sector to become dominant, and we're doing some of the classic things that we should avoid. For example, a really important one is that we should be thinking about investing and developing an asset that would take the place of oil and that would lead to further diversification. But we clearly are not doing that. It's not ever easy to achieve something like this. Yes, Guyana talks about mobilizing the diaspora, but there's one thing to say we'd like to do this. There's another thing to actually harness that diaspora and the skills that are available to produce the economic diversification that we need. Guyana is experiencing inflation right now. And there is an argument, is it oil and Dutch disease that's leading to a rise in the real exchange rate through inflation? Or is it the Ukraine war, the Ukraine-Russia war? While the jury might be out on things like that, I think that if Guyana were thinking about a future beyond oil, I shouldn't say beyond oil, I should say a future that has a time horizon of more than 30 years, then it would be looking to signals such as these, inflation and the loss of competitiveness of traditional products, as things of tremendous concern. So I'm going to close by returning to this matter of our time horizon and how long it is. Because unfortunately, what we're doing regarding energy itself is that we're thinking of natural gas as this transition, ignoring the fact there are two things that we tend to ignore here. First of all, the cheaper energy it might be unnecessary, but it certainly is not a sufficient condition for economic diversification, for economic transformation. People who are familiar with Guyana would know that there is an area called Linden, a town. It was a bauxite town that has benefited from highly subsidized energy costs for a very, very long period of time. But it also happens to be one of the most depressed areas in Guyana. This assumption that the lowering the cost of generating electricity is what's going to add up to transformation, for me, is a rather big mistake. And the second concern that I have about that is that by investing all our resources so heavily into natural gas for energy production, or for that matter, in this quest to monetize our petroleum assets this quickly, we're locking ourselves into a time horizon of just about 30 years. And I think that if we are to be really serious about sustainability, we ought to be thinking definitely more than 30 years. And within that 30-year period, I might add in conclusion, that we're beginning in Guyana, as in other Caribbean countries, to feel the effects of climate change more than we've ever done before. Indeed, this is the experience of us all in the world. If we're experiencing those things without taking active decisions to address them, then we're looking at a future that is rather bleak. And therefore, so in conclusion, I would say that Guyana might seem to be, as Arthur pointed out, to be the place at which, and the area to which investors are looking, and many people are looking because of the high growth rates and so forth. But this ought to be tempered, even from the perspective of investors who are thinking beyond, 30 years.
Mm-hmm.
This ought to be tempered by realities, including the realities of climate change.
Thank you very much indeed, Thomas, and for addressing the implicit question of the plausibility of Guyana's claim to be using gas and fossil fuels as a bridge to a renewables-based green economy. You really have addressed that. Janet, I wondered if you could pick up on the points that Thomas has made about governance and the effects of climate change.
Yes, I think, thank you, Sue. I'm really pleased to follow Arthur and Roger and Thomas here, because what they've outlined is here is a government which has this aggressive oil and gas development, and in parallel has launched and claims to be on a low carbon future. And so I have to ask myself, or we can ask ourselves, what green transition are we talking about? So in July of this year, the government issued its Low Carbon Development Strategy 2030 publication. And this had, builds or intended to build on, or was stated to build on, the 2009 LCDS, which had been the condition or the kind of stamp for them to get Norwegian funding. That's another story. But if you look at this document, 100 odd pages, the LCDS 2030, it's, first of all, you'll see that there's no authorship. Who authored it? No names are listed. In which institution is it housed? I think we would know it's in the office of the president. That's not listed. There are 10 pages of all the consultations that they had across Guyana, probably very expensive. 10 pages of those, but it's again, the kind of thing that has become so distressingly common in Guyana. We all participate, you participate, I decide. So, you asked, Sue, what's the impact on gender and marginalized communities? Well, maybe those communities were also, because there are photographs in the LCDS 2030 of people who are honestly, earnestly trying to make a point. But there's no narrative thread that links any of those participants with this LCDS. And when you actually read it, the majority of the verbs are in the future tense, though between LCDS 2009 to 2022, the present government was in power most of those years, except for between 2015 and 2020, 5 years. It's a very aspirational document. So all of these future tenses, there is no action plan. It's not mainstreamed across any government agency. And for me, it's one of the real sort of, what strikes me about this low carbon development strategy document is that it ignores what Guyana had, which was a world-class national development strategy process in 1996-97, where then President Cheddi Jagan convened over 200 participants across all sectors and skills, and they produced this multi-volumed national development strategy, which just mothballed after his death. So what we have now in Guyana, it's just no multi-stakeholder process. And this is deeply worrying because as Thomas and Roger say, here is an unconsulted move to, oil and gas sector, high high oil consumption sector that really is lodged solely in the executive arm of government. Governance issues in Guyana are, I think, as Arthur said, worrying to investors. Well, more extremely worrying to Guyanese who live in Guyana. This is a small country, as Arthur mentioned, racially divided. The government has a razor-thin majority of 1 seat in the National Assembly. And so just to take the LCDS, no consultations or no multi-stakeholder process with the other members of the National Assembly. The minister, who is not the Minister of Finance, but minister with responsibility for finance in the office of the president, begging the question of who is the Minister of Finance? We all know in Guyana who that is, but he shall not be named. Minister tables it in Parliament in July. It's passed 3 weeks later. No participation by the opposition benches. So the calculus of the government is, let's have this document we can wave at the foreigners. Low carbon development strategy. In practice, while we merrily go along with this aggressive oil and gas development, their calculus is, we know from every other country in the world, you have circuses, you reward selective constituencies who have reliably voted for you in the past, or who will vote for you in 2025. We will increase our majority of seats in the Legislative Assembly, and we will be like Equatorial Guinea, free sailing for the next 25 years while oil lasts. So I think there is not going to be any green transition. There are no structural changes in the economy, no structural changes in the other highly polluting, highly destructive natural resources extractive industries, gold mining and logging. In fact, those are just very deep tragedies for the poor, the people who live and who have to suffer the impacts of gold mining and logging. So what we have in Guyana over the last, since with this neoliberal turn, with government being the chief cheerleaders now of ExxonMobil, is we have the privatization of public property, forests, gold concessions, logging concessions, and now the best hydrocarbon concessions. Privatization in a very few hands, linked to the top apex of power, and then the socialization of the harms. And in terms of oil and gas, 27 supply ships merrily, they come to every day. If you stand on the seawall in Georgetown, they are bringing to Guyana what? Waste, including waste which Guyanese have to deal with. The oil goes north for processing. We can buy it back. The refinery will be, as Thomas mentioned, completely uneconomic. They have no economies of scale. What Guyanese are going to be left with is, seeing already and worrying about the threats, the risks, the costs of rising sea levels, of this kind of worry about mad digging of more and more wells in this kind of unaudited way, no monitoring. These are heavily discounted, not mentioned in the LCDS. So in terms of what you asked me, so with poor and marginalized communities, they don't count in the calculus of trying to figure out who will vote for me. These are just, inflation, which Thomas mentioned. We are going to give subsidies to the selective communities that we have from time to time. That works. It's worked in many countries. It's worked in Mr. Trump's USA. It will work for us as well. So I am not in any way, I don't see any sign of any green transition, not in the LCDS 2030, nor in any of the actions that have been rolled out since 2020. Thank you.
Thank you very much indeed, Janet, for those cogent remarks. And as you say, looking at it outside the narrow realm of political and economic vested interests, which have emerged in Guyana, and for highlighting the significant structural problems of economic diversification and impact on marginalized communities. A question which has come up in the chat function, which to what extent do you as speakers feel that a regional approach to zero carbon transition, utilizing oil and gas resources, would be feasible to give CARICOM an energy security during the transition and food security through internalizing production of fertilizer? This question from Ulrich Trotz. Now, Arthur, if I may begin with you, you talked of international energy companies putting pressures on government because of decarbonization targets. Where do you see the role of the private sector in a regional approach to act as an incentive for zero carbon transitions?
Yeah, thank you for the question. It's tough because a lot of times these multinationals, right, they're looking to make a profit in short to medium term, and once they make the profit, they move on to the next project. Not to say that they're extractive and they just come and leave once they reap all the benefits. That's not what we're seeing. But in terms of them forcing a regional cooperation, I only see that happening if they have some benefit that they'll get out of it. So say there's no solar power in Trinidad, but they need access to it. So let's build transmission lines from somewhere else that has solar power so that we can consume renewable power and lower our carbon emissions. That's where I see it happening. But the thing is, Guyana and Suriname, if the reserves do move forward, which I do think they will, the earliest that they'll be able to export this gas, or via pipelines or via LNG, is going to be near the end of the decade. It takes a long time to develop this infrastructure, and this infrastructure doesn't often pay back for 20 or so years. So in terms of the energy transition, does it make sense to develop this infrastructure? I think the only way that it does make sense is if this infrastructure is what I like to call transition ready, in the sense that they'll be able to transport lower carbon fuels such as hydrogen, such as renewable natural gas, green ammonia, methanol, whatever it may be. If they're focused just on transporting the fossil fuels that we know of today, it's likely that they'll end up stranded in a couple of decades. So I think that when we're looking at energy security, doing a regional cooperation makes a lot of sense, because Trinidad is struggling with gas reserves. Guyana and potentially Suriname are going to have those that can replenish some of its falling gas to help sustain its petrochemical industry, its LNG exports, etc. But I really don't know if the private sector is going to be that involved in this unless they see, of course, a major benefit coming out of it. We've seen conversations from the Brazilian government with Suriname and Guyana in terms of building a corridor, right, to power the northern part of Brazil that depends a lot on Venezuela's energy, and they want to become more self-sufficient. Now with a new president likely coming in, it seems like the polls are all indicating that Lula might be elected. Those talks are going to start from anew, and likely won't come into reality until maybe 2025. So these things take time, and I think the message that I'm trying to say is that if you're going to develop something that is a long-term project, you need to make sure it's aligned with the long-term transition goals of these companies and of the broader world. So I think that's what companies are looking at when deciding when to invest and move forward with the project.
How to harness the profit motive. Roger, your view of this, to what extent do you see that any political appetite in Trinidad and Tobago for a regional approach?
There is political appetite. We have made many announcements of shipping or piping LNG and piping natural gas from Trinidad and Tobago up the islands to St. Lucia and St. Kitts and so on. We have started to supply some basic amount of LNG to Barbados, I believe. So there has been talk around about a regional energy approach, but it boils down to, as Arthur says, the incentive structure. In that, if you just before I came on, I had another seminar, and one of the slides I used showed that in the period 2010 to 2021, of the top 25 worst performing economies in the world, there were 10 CARICOM countries. So where would the funding come from for private sector firms to get involved in energy transformation in the Caribbean? They would have to depend heavily on grant funding, on some type of support infrastructure from various places, including the developed world. And as it stands, the fiscal balances in the region are not good. Guyana may probably be moving into a fiscal surplus now. But Trinidad and Tobago we have had persistent fiscal deficits for many years, for many, many years, almost 10, if not more. And the non-energy fiscal balance is terrible. I mean, it's like 20-something billion TT dollars. So a critical aspect of a regional approach to improved energy utilization, to a reduction in the use of energy that produces fossil fuel, will depend on the incentive structure and will depend on funding to make it all happen. So yes, if you speak to all of the CARICOM governments in one place, everybody, and Thomas and they will know this, everybody would agree, yes, we are aiming for this, this is our objective, we are all on board. But we have been saying that for the last, let me guess, 15 years. And it will continue in that straight line unless there is an appropriate incentive structure in place to make it happen, and to make it happen nationally, and to make it happen regionally. A lot of pressure will now be on Guyana to get some of these things done. People would simply say, well, Guyana could fund it, Guyana could fund it, Guyana could fund it. And Guyana is not in that position as yet. Guyana has a lot of structural. I was very glad to hear Janet speak. I mean, to me, Janet's conversation and explanation about the situation in Guyana was raw, but it was direct and accurate. And I think a lot of transformational changes must be made in Guyana if they are to use this energy sector rents to help create the right setting and productive structure for renewable energy in Guyana, far more for the region. And certainly Trinidad and Tobago, we are struggling to even meet our non-energy fiscal balance. So we run persistent non-energy fiscal deficits. So it would be difficult for Trinidad and Tobago, which was a giant economy in CARICOM for many years, to now subsidize or lead the renewable energy trust in the region. So it's going to take some multilateral support, some Commonwealth support, some grant funding from relevant entities. It can be done. We would like to do it, but it is, in my opinion, going to need a lot more work and a lot more parallel groups involved in order for it to happen. That's what I think.
Thank you very much indeed, Roger. I know you have to leave in 15 minutes, so thank you very much indeed for that very important contribution. Thomas, your view from the perspective of Georgetown. Your microphone is on silent.
Oh, yes. So cooperation is generally going to be difficult. And I mean, we point to a few things when we think of cooperation and fault lines, trust being one of those things. I do not know that in CARICOM as yet, there is that, there's the infrastructure, there are the fundamentals that would lead CARICOM governments to put aside their national interests that readily, even though there might be these fairly obvious gains from cooperation on energy, for example. It becomes that classic prisoner's dilemma issue, doesn't it? Where the benefits from cooperation, but the national interests tend to dominate. A key national interest here from a country that can afford it probably is Guyana's national interests. And a question will be, to what extent does Guyana feel that it can and is willing to and is able to engage in energy cooperation in the Caribbean? Putting aside, mind you, that it's going to be very costly to do this. Guyana and the rest of the Caribbean are spread across, geographically dispersed and separated by these oceans and so forth, these seas. Energy cooperation is going to be costly. And as Arthur said, if we were to try and get a private sector entity to be involved, that private sector entity will have to see the benefits in financial terms. I'm going to close by making a suggestion, a proposal. And by the way, I am associated with something known as the University of Guyana Green Institute. We've proposed, and I noticed that Arthur had mentioned this in one of his articles, that Guyana can think of what we call an upstream carbon tax at the wellhead. That is to say, a carbon tax. Instead of on production at the petrol pumps, let's say in developed countries, that carbon tax levied at the level of, sort of think of it as every barrel of oil, the carbon content in every barrel of oil. It overcomes the political challenges of trying to have a carbon tax in developed countries. It is a classic example of a flat tax, an optimal tax that has a minimum of excess burdens, as we call them, deadweight losses. And it will generate revenue for Guyana. In point of fact, if adopted by Guyana and Suriname in the Guyana-Suriname basin, it generates revenues for Guyana and Suriname that could then be used. We thought of it initially as supporting climate adaptation, but there is no reason why it can't be used to support regional cooperation in energy transformation. Because I think that's where the key might be, not the provision of energy, but in the financing of energy transformation. So I will end with that proposal that we believe is a strong one.
Thank you very much indeed. Janet, my light has just gone off in my office. It's not a power cut here in London, just in case you're wondering. Janet, my question to you is slightly different. How active is civil society in Trinidad and Tobago and Guyana in pressing for green transitions, in pressing for the interest of marginalized communities who are so targeted by the extractive industries and bear the brunt of this at the lowest level?
So I have to respond to these three gentlemen.
Oh, I apologize.
Yeah.
I'm trying to make sure the questions are ready.
Thomas ends up thinking, oh, maybe there's possibility of pan-Caribbean collaboration to answer Neville Trotz's question. It didn't happen in the 1950s for the idea of West Indian Federation. It's probably will not happen in my lifetime. So just to I know Roger described me as raw. I'll give two examples of the insistence on quote unquote sovereignty that we've seen in Guyana in the last 2 months. So in one case, there's a Trinidadian company that offers services to the oil and gas industry in Guyana. They've been offering this for 10 years. Now there's another company in which a minister of the government, the present government, was an executive member. I don't know if he owned when it was registered, he was on the list of directors. And the government of Guyana is trying to, because of this local content legislation, which Arthur mentioned, which is heavily politicized, has made this very specious claim that they didn't have Guyanese content on this for this company, which is involved with with millions of US dollars worth and has a kind of reputation with this oil business. So the minister removed his name from the directorship, but after that name had been removed, he was still signing contracts. And now we have the whole machinery of the executive arm of government, the Guyana Revenue Authority, investigating this Trinidadian company for non-payment of taxes. This just gives you an idea of the kind of going into the weeds of quote unquote sovereignty and links to highly political individuals and their companies. In the case of Suriname, maybe mistakenly or ill-advisedly, President Santokhi said at the beginning of his when he arrived in power, flushed with power in 2020, that Suriname would give 150 licenses to fishing vessels of Guyana to fish in Suriname's sovereign waters, their EEZ. He hasn't been able to deliver that because Surinamese politics is not like Guyanese politics, where power is so concentrated in one person. That's Guyana. Well, in Guyana, two persons, VP and president. So licenses have not been delivered. The fishing constituency in Guyana is seen as increasingly important because as sugar has declined, fishers are East Indian. They're important to get their votes at the next election. So we've had recently the vice president saying to the Surinamese, look, you have companies here operating in Guyana. I'm just issuing a warning. It's the kind of quote unquote, to use Roger's term, raw sovereignty that we see in Guyana, which I think would preclude any hope of any pan-Caribbean, pan-CARICOM rationalization of moving to using oil and gas in a strategic way, or even to do a green transition in a strategic way. I don't see it happening in the Guyanese context.
Thank you very much indeed. I want to come back to the question of civil society in one moment, but if I could just put a question to you, Roger, before you have to leave. How far do you see one of the structural impediments to green transitions, in fact, coming from unionized labor? In other words, from the workforce, rather from the policy environment, the question of structure of incentives, the lack of a political culture driving this particular agenda of green transitions. Do you see that as an impediment, or is that essentially irrelevant? Sorry, Roger, you're on mute. I apologize.
Irrelevant in terms of the focus. The unions at this point in time are on a completely different beat. They are focused on increased salaries. Yep. They are hearing pronouncements made by senior technocrats that the energy revenues are on the rise, things are going reasonably well, and therefore they are focused in the utterances that I hear and the material that they circulate that I read. I have not really seen any of them have a non-wage-based focus. I suspect it would be the same in Guyana and Suriname as well. Money is somewhere in the background. We want our share of the money. Now, where the push for transformative change can come from is from civil society. But again, if the civil society group SU is dependent on the state for subventions to survive, then that tends to color the chorus that they sing, the songs that they sing. And what we therefore need, in my view, is independent financial support for civil society from the outside. Because what you would have, and Janet sort of mentioned it, and Janet, when I mentioned your use of the word raw, I didn't mean that in any negative way at all. I like the way you speak, direct and to the point. But if you listen to one of the things that Janet said again there, a lot of things in these small developing countries are interrelated. There is so much interrelated. I am not going to say corrupt. I am being politically correct and say interrelated. And so unless you could get some sort of independent funding, if you are a civil society group trying to put pressure to create change and your subvention depends and is linked to the person you are putting pressure on to, in terms of your NGO surviving, then you won't be able to put any pressure on them. So this is a messy situation in the sense that we need global support. We need global support for NGOs in particular, which have demonstrated they are willing to put in the hard work, but without the right type of resources, without the right type of support. And you know, for many things, and like Janet, I tend to be off. For many things, the developed world turn to us and talk and talk and talk and talk. And when it comes to financial support, there is none. So somehow they miraculously expect us in the developing world to get these things done without the right type of support from the developed world. And I think that one of the things that could come out of this conversation here, I've listened to everybody very carefully, is there is need for institutions in the North and NGOs in the North that are large and have good funding base to support institutions like the Green Institution that Thomas directs, and the Shaw Foundation that I am a part of, and other institutions of that nature, so we can make the right lobbying and not be dependent on internal politics of the economy for financial survival, because it constrains in a very serious way the type of support you can put forward. For sure, there is an understanding of the need for cleaner energy, for more environmentally friendly energy, for renewable energy, but a lot of it a lot of the drive and sense of purpose wouldn't reach the right audience in the current status quo. So I would close up with that comment.
Thank you very much indeed, Roger. Before I come back to Janet and Thomas, Arthur, if I could ask you, what appetite is there among multinational companies to focus as part of, if you like, their CSR on providing accelerated education and training in the broader sector? Or are they entirely focused, in your experience, principally on the profit motive, rather than thinking about the ancillary benefits that could be generated in Caribbean political economies by accelerating, addressing education, addressing training, addressing the technical skills gap that exists?
Yeah, good question. No, there definitely is investment going into training and technical institutes. We saw the Oil and Gas Institute in Guyana being inaugurated. So, or not sure if it's been inaugurated, but announced. So there is a large investment from the major companies, you know, the EXxons and the Stabroek Consortium partners back into the country. And that makes sense, right? They want to build goodwill with the government. They want to build, you know, a good public image with the people, civil society. But also in the long run, it also helps them with having more people trained to service their operations. So it's a win-win, in my opinion. I think that's going to continue as long as they're around and as long as they're, you know, profiting in Guyana. They recognize that they need to reinvest into the community, whether it's through institutes, whether it's through providing local jobs, whatever it may be. They need to keep providing that to sustain their goodwill within the country and within the government, because a lot of, as been mentioned several times here, the margins in elections in countries like Guyana and Suriname are so small that every constituent in a way matters, because it can be such a swing vote. You know, I've heard of people being in meetings with the executive and the executive coming out of the meetings to take phone calls from constituents directly, because that's how small the margins are. You need to be in good hands or good standing with community leaders, because they can sway the election one way or the other. So as long as the government keeps requiring this from companies, and companies see the benefit from it, even if, you know, in the short run it's not a profit, a direct profit, they are going to continue investing in these institutes and trainings. And the biggest thing that I've heard from international companies operating in Guyana as the biggest challenge that they have is the lack of local capacity to sustain the pace of development. So it makes sense for them to invest in it, because it is the major problem that they face, is not having the local capacity to fulfill the local content laws, the local content thresholds that are being, imposed on them. Of course, the local content law is important and positive to, incentivize contribution of the local community, but it also can't be politicized the way we saw with Ramps Logistics mentioned by Janet. That's basically the opposite of what this local content should be achieving, right? And it's going to discourage discourage other multinationals and other companies in the region to come into Guyana, because they see companies that are reputable, that have a proven track record, that would be a benefit for the country, and then their license just gets denied just because a competitor who has no proven track record but has important connections is coming into the market. So you can't operate like that in any country. But I personally don't see that changing much in the short term.
Okay, that's definitely a recipe for governments driving harder bargains then with multinational corporations. Janet, if I could put the question to you about the role, activity, and leverage of civil society in your experience in these contexts.
So thank you, Sue. The one lever that civil society has at its disposal in a country where power is so centralized according to the constitution we have is the Environmental Protection Act. Civil society, without funding, or many elements of civil society, without the funding that advocated by Roger, have over the last year and a half tried to hold the feet to the fire of the Environmental Protection Agency to say, with each new environmental permit that's being required, you have violated the terms of the Environmental Protection Act in terms of the TORs do not have to be published for when they send up the EIA, but the times between issuing the publishing in the newspaper to the time they close it, to who they get, all along the chain of getting an environmental protection permit from the EPA has been violated. And a small group of civil society members, including the marginalized and the gendered, have used the power of the press of the fifth estate to ask these questions. They forced, in some cases, to have had open Zoom calls with the EPA, which is wonderful. No questions have ever been answered, and these permits have all been issued. And so we have most recently the oil and gas. You mentioned the gas pipeline coming to shore in Guyana, which is a pipeline there's been no feasibility study, as Thomas mentioned, none whatsoever. This probably could be an environmental disaster and an economic disaster. But anyway, the Minister of Finance, the minister with responsibility for finance, not the Minister of Finance, announced 2 weeks ago, oh, the environmental permit will be issued in 2 weeks. And I waited after that to see whether the EPA would have any self-respect and offer some kind of disclaimer. No, none whatsoever. So it shows the way in which civil society has tried. The only lever available is because the Environmental Protection Act has legal stipulated elements to be followed, and to say, you are in violation of this, we want answers, and has received no answers, and permits have been issued in every instance to companies which have violated Guyana's Environmental Protection Act. So society doesn't need more money. It just needs the rule of law, and it needs, from countries like the UK, the USA, and Canada, some support, which they're not giving. They're a big dancing with the president, the high commissioner dancing with the president. They're just not giving sending the kind of signals to the government that this is actually not the rule of law. And I am, Canada, for example, said there's a particular person who did one of the quote unquote EIAs for Guyana, who is completely discredited in her own province, Alberta, was forced to resign And then the Canadian government pays for her to come to do a whitewash on an EIA. So that's the reality, is that what we need is not money. We need governments in the European Union and in the UK and USA to take their word seriously and support civil society when it's talking about the rule of law.
Okay, as you say, underpinning critical institutions of governance. Thomas, in your view, the role, the traction of civil society, and Janet also mentioned the media. To what extent do you see media being important points of leverage, or are there also, because of narrow political environments, that these are also narrow media environments too, in terms of vested interest and editorial control?
Right. So perhaps I should answer, Sue, by answer that question by first of all making a remark about the policy space in Guyana, because it has been our experience that it's very difficult to find entry points into the policy space in Guyana, even if one were to write either newspaper articles or publish academic papers. There is a hegemony of thinking that I referred to earlier on, this domination of thought that's very difficult to overcome. And it's very difficult to overcome because it happens, I think, in every one of our administrations. The public service, which ought to have the people who are making policy or informing policy, they tend to read the political tea leaves. They tend to know what the political process wants, and they would enforce that. So there is that general framework within which we operate. The media, I believe, plays a very important role in public education. In Guyana in particular, where oil is new, there's much for us to learn. And I think that there are some media houses that are assisting the process. The trouble is that because the policy space is so locked off, the media engagements tend to go one way or the other and to become extremist too quickly, I believe. I think if we had that sort of opportunity where the media can put out information to be digested by people who are not looking for political implications. So there's a demand side to what goes out by the media. There are people who read them, the articles, and try to infer from them the political implications of what, or the political positions from which the journalist is coming from. So it's very difficult for the media. What has helped in other contexts has been the social media. Whether the social media can help us to get a better appreciation for what's happening in oil, and maybe to demand of our political leaders that we want a particular kind of outcome. It is absolutely correct. Our politicians respond to the constituents. But whether that can happen or not, I believe is limited because the discussion of oil itself is quite complex. What we need to do, I don't share the view necessarily that it's civil society. I share the view that information sharing is important. But I think if we want it to be effective, we've got to turn to those very constituents that are important to the political directorate. I refer to the private sector, for example. But unfortunately, the time horizon of private sector is rather short. And so they're looking to the local content provisions to give them an opportunity to get into, to give them an opportunity to make money. If, on the other hand, the private sector were able to think about a future that is more than 30 years, then that private sector will be able to tell the government, the political leaders who listen to them, that what he would like. So a lot of it has to do with vested interests and the kind of pressures we might place on government. If everybody is on the same page, and that includes the oil companies, then moving the discourse is extremely difficult.
Thank you very much indeed. I have one last question, which I'm going to put to you all before I must draw this seminar to a close. What prospects are there for regional agreement on support for a fossil fuel non-proliferation treaty, which was proposed by Tuvalu in the UN General Assembly? Could you, as speakers, comment on the chance of ending fossil fuel subsidies in the three countries under discussion? Roger, who's had to leave, implies that there is limited political scope for this. But Arthur, what are your views on prospects for regional agreement on fossil fuels? Are international energy, or rather, international energy investors at all concerned about such things and shaping their decision making?
Yeah, I'll be pretty brief. I think the break-even cost of extracting oil in Guyana and Suriname are extremely attractive, regardless of the price of oil. It ranges from $25 to $35 per barrel. And in Suriname might be a little bit higher, maybe $40 per barrel. But the way that they're being subsidized right now, it's not direct subsidies as you see in some other countries. It's rather through tax breaks and other incentives. So I see the next production sharing agreement in Guyana being a little bit less generous to the oil companies now that they have a massive proven reserve. So in that way, I think those subsidies are going to be removed, but I don't see that impacting the goodwill of these oil companies in operating Guyana. In Trinidad, there's been a lot of talks about removing the subsidies for the gas price in the local market. And it looks like they are going to remove those subsidies in the near future because they're struggling with deficits, and they realize that in order to incentivize other types of energy, like renewables, they need to make it more cost competitive in comparison to gas. So they're trying to preserve some of that gas to be used for the LNG exports. So it looks like they're going to remove those subsidies in the near future. I would say in the next 1 or 2 years. But in Guyana and Suriname, it's not really applicable, and it's going to continue as is.
Well, from the way that you and Roger have been talking, it's likely there'll be considerable societal pushback on that because of the laggardly behavior of the non-energy sector, after all. Janet, in your view, any prospects of regional agreement on supporting a fossil fuel non-proliferation treaty? Or you want to pass comment on that?
Well, if it's my last 30 seconds, I would say vanishingly small, exactly as Arthur said. But I think I would just say to your audience, Sue, the plantation never left Guyana. So the plantation is alive and well, and I am not, power is very concentrated, ownership is concentrated, and it's at the very top. It's very sad. Tom Thomas is a bit enthusiastic or optimistic about media. Well, we have the same social media bubbles in Guyana as you have in the UK, as in the USA. So people are, ethnic social media is very alive and well. It's a very vulnerable space and time. And I think these kind of societal insecurities, which Arthur mentioned, which companies are worried about, are really to be worried about, because unless we build multi-stakeholder processes and begin to, the buzzwords which the high commissioners and so use, including yours, Sue, inclusive society and governance, have to make those happen for a place like Guyana. Thank you.
Action, not simply words. Yeah, I completely agree. Thomas, your views. I'm sorry, this must be your concluding comments.
Yes, that's fine. I share the views expressed before that it's unlikely that there will be this regional agreement. What I can say is that Guyana has, in its LCDS, it's a call for global carbon pricing and the removal of fossil fuel subsidies. But of course, it's thinking about removal of fossil fuel subsidies in developed countries. I can conclude by saying that, as Keynes suggested, in the long run, we're all dead. And, we in the Caribbean seem to seize that as our understanding that, you know, this is our opportunity here. And certainly that's the view in Guyana. I'm not sure it's in Suriname, that we should make best use of what's available here. I think all the interests are aligned for that to happen. But what's the elephant in the room for us, as it is in other countries as well, is that there are some global issues, some overarching global issues that are going to bite even as we continue on a path that is unsustainable. And I do hope that we, somehow or the other, in Guyana, can actually give some leadership to this. Vanishingly, what's the expression, Janet? Unlikely.
Colleagues, thank you very much indeed. I've done my best to weave in the discussions from the chat function, but I'm enormously grateful to all of you and to Roger, who of course has had to leave, for your expertise, for your different perspectives in setting out in realistic and cogent terms the different pressures, the structures, the dynamics, the relevance of political space, input of fiscal structures, regulatory environments, but particularly the enmeshment of political and economic vested interest in the Guyanan case, but of course also exists in Trinidad. Thank you very much indeed for your insights into these very real challenges. If there is going to be genuine transition, a genuine bridge from fossil fuel producers to renewable energies and the environment. But as you have pointed out, Thomas, we may be all dead, but we have a diminishing space in which to address these issues. And there is need for global support for internal advocacy to uphold the rule of law, but principally in terms of generating sufficient finance to back these necessary policy initiatives. So thank you very much indeed. I'm enormously grateful.